Okay, did anybody think of any questions or anything as, whoops, that didn't work very well, did it? As far as, I'm not the cocoa, we're turning it a little bit. There we go. Okay, as far as income tax or W-4s, anybody have any general questions while we're starting that?
I had one. I was actually more worried, but he was filling out his W-4. One of the people that I work with, and he switched from like 5 dependents to 2, and then he switched it back to 5. How does it affect them in the long term, or when they come to do their taxes?
Right. The easy question is every return's different. So it depends on if they're single, what their filing status is, what credits they're going to qualify for. Some people have it down to a science where they know it really well year to year. So if they've got little, small kids that aren't going to be aging out of any kind of credits, so you've got a 5, a 6, 7-year-old, that kind of age group, some of them know what credits they get every year, and so that's how they base, their W-4. Some companies as well, like you were talking about, some have access to change it that much, some don't. So some of them can go themselves and, change it every couple months or whenever they want. Some, it's more of a struggle. They got to find an HR person, chase them down for a few weeks, to get it done. And the sad thing is, like I told you guys a little bit ago, usually they wait till the middle of the year or, that's the ones I find it hurts the most is the ones that don't come into like April or May, the late filers, because half the year's gone. The ones in January and February, they get refunds usually anyway, so it doesn't hurt them as much. But the ones that file late, if they didn't ask us for April or May, they can change it mid-year. Every little bit helps, right? So it really just depends on the situation. Now, if he truly has 3 or 4 or 5 kids, no.
I don't think so.
Yeah, legally you can put whatever you want. Yeah, legally
like
you can.
19-year-old guy.
What will eventually happen, though, if he under withholds? So say when we were talking about that tax liability, if he ends up owing every year, sometimes eventually the IRS could send a notice to his employer to make him change it. They could authorize that they change it. Now, I've not seen that happen. I saw someone that I knew was doing that, so that's how I checked into that rule about that, because he was abusing it for a long time and never got caught from the IRS. So you definitely can put whatever you want on there. They don't check that. They're not going to come tomorrow and bang you over the head. It's just not something they review. They leave it up to you. It's an honor system to put what you want on that W-4. The only thing that usually even employers won't let you put, there's a spot you can put that you're exempt from taxes. They usually won't let you do that unless you're a student. Okay, 24 or below and a student. They sometimes will let you be exempt. But I tell everybody, put a high number. At least if you're exempt, put something so you just get a little bit of a refund and you start learning how to pay in and how to file taxes, But yeah, there's no real set of rules on it. The IRS would rather you pay 90%, that 90% number. It's easier on them and then easier on someone who, if you don't go by that guideline, like I said, if you get surprised and owe thousands of dollars, you could get into that path of owing thousands of dollars, and it's just not a good road to go down. Okay? Likewise, we'll see people come in, especially this year. I've had multiple people, more than 1, more than 2, that's waiting 3 and 4 and 5 years to file. Totally legal. Totally legal. A lot of people don't realize that. Oh, it's legal, but if you owe, you're going to be penalized every 30 days on interest, late filing penalty if you owe. The only time you're not penalized is if you get a refund. And then you have 3 years. After those 3 years, you forfeit your refund. So they're not guaranteed to give it to you. So I've had people this year that came in, 2015 was closed, and they came in to file and didn't even realize that rule and lost out on thousands of dollars. And I'm like, well, you're an idiot.
Oh my God.
I didn't say that, but it's like, why would you wait? But they get scared. They think they're in a bad situation and they don't know what they don't know. I wouldn't wait 3 or 4 years. I'd at least go take it and get an estimate and be like, do you think I'm getting a refund? Because sometimes you want to look at people and go, why didn't you just ask for help? Like, why, why? Why do you do these things, Because likewise, maybe one of those years you get a refund, one of those years you owe, well, they could offset each other and then you don't owe anything. But if you wait 6 or 7 years You know, you may lose refunds. They may not be willing to apply it to your debt, and then you owe 3 times as much. So it is really surprising sometimes the way people do what they do that come in. You know, and all we can do is help them through their issues, you know, ask the questions we need to ask. But we do see all sorts of things come in like that. Income tax, each type of income and tax withheld is reported to you and the IRS on a different form. For some types of withholding, the withholding rate is set by the law. So some types of, kind of like I was telling you on your W-4, you really aren't supposed to put exempt unless you're a student or don't pay taxes. Some things would be, this is probably not in there because you guys can jot this down if you'd like. Some types of things on set by law, if you guys have ever taken out a 401ks or retirements early, you always usually have to put taxes withheld on it. They'll pull something out for you. So things like that is what that's talking about. Total amount of federal income tax withheld is reported on line 16 of the 1040. Now, one thing here, you'll notice some of these will talk about the lines on the 1040. I'll have you guys have a faux 1040 when you're testing, so you won't have to memorize it per se. Also, you'd be able to pull one up on Google as well to look on the test. That's one thing yesterday, my gal that was testing on that higher level test, she said, oh, I didn't pull up a 1040. Hit me all these questions about lines. I didn't know where it was because there's just so many lines. There's no way to always have it memorized. And they've changed so much in the last 2 years. I couldn't tell you what line's what. So different than what it was. Years ago, I could tell you on the 2-page 1040, but now there's like the half of this postcards, and then there's different schedules that roll over to it. Unless you've just literally studied it for the last year, I doubt anybody has it memorized. And it's going to change a little bit again this year. So we will get those final updates by January 1st to kind of know what it's going to look like. So anything you see now until the end of December is usually just estimates on what the new one's going to look like. Okay, they may have a better idea when they write the software and release it in December, especially if they've gotten the early versions from the IRS. But I know the early versions back in the summer I saw looked more like the old version. So I was like, so you tried to change it up. Now you got to go back to what it was. Okay, as an employee, your employer withholds the taxes. Federal income taxes taken out of your wages is box 2. So that's always a good thing to remember. That's box 2. Report the total amount of federal income tax on line 16. Only the amount of box 2 is entered. You do not have to enter the Social Security withheld or Medicare. And so the way it works in our software is there's a button that'll say, is it the same amounts? And you just click it, and it puts them in there for you. It will auto-populate it. You guys will get plenty of practice with that. Likewise, on the competency exam, we'll have that 1040 for you so you can answer those. And this is just showing you federal withheld comes down to that line 16 on the 1040. So, employer usually must withhold income taxes from your wages. Yes, we've talked about that. Your employer bases their withholdings from the W-4. Now, what is the downside to all of this and it using your W-4? Well, you have to rely on that employer, especially if you're the ones that can't access it yourself, for it to be correct. So a good rule of thumb is, remember when I was telling you if they come in here and it looks odd, when did you fill out your last W-4? Have you updated? Have you gotten married? Did you recently get divorced and you used to be claiming kids and that's why it was low? What is the situation? Sometimes some people know it so well, they were purposefully under withhold because maybe they're being garnished and they don't want to pay any much taxes, right? Because if you think about this, if you know your refund's going to get held, why would you pay in more money to them for it to be taken, right? So that's another one of those things to always look for when people come in here. If it seems fishy, we kind of want to ask because a lot of people don't realize on those bank products, which we do talk about later on, that's where if someone gets a refund, we get paid out of their refund. We don't get paid if they don't get a refund, if they've signed up that way. So a lot of times they don't realize we don't get paid if they don't get that refund issued. I had a longtime client one year, he'd had into some issues and he knew he was going to get it taken, his refund taken, and he's like, oh, charge whatever you want, they're going to take it anyway. So he thought we were a collective body and we could get his money, and I said, oh, we get paid nothing. We don't count as a creditor, we don't get to do that. So we get nothing for doing your stuff. So The other class was like, well, how do you handle that? You know, do you let people come back year over year that owe you? And I said, well, I try to handle it when those situations arise. Usually we kind of will know going into that year who's the habitual offenders. And then sometimes we'll do a little list. We're like, okay, if they happen to come in, we might want to have a chat with them. We might not want to offer them our latest $50 or whatever if we know we've never gotten paid on them in 3 years, you know. Some places won't even take your business. Some H&R Block and Jackson Hewitt, I think, will refuse you, which is sometimes why we get those clients. But the good thing is, you know, maybe if we scratch their back, they'll scratch ours. Here's you some referral slips. Bring us some business, you know. Liberty's view in the past was, let's try to be good to those clients because eventually maybe they'll have their stuff together and they'll become paid clients again. So, and they usually remember who helped them. So that's the good thing about offering help is usually they're pretty good to us if we're willing to help. And we do get a lot of those that'll come in from over there. They'll come in, hey, I was just at H&R Block and la la la, you know. So we try to help if we know it's a way to gain a client. Sometimes it's not the easiest sell, but sometimes what we see is H&R Block just didn't take the time to sit down with them or didn't have the time. And then if we do, you know, they're willing to pay for it, for the help. So sometimes it's all in how you handle the walk-in business. Okay, Form W-4, 3 types of information. Whether to withhold at single or a different rate, how many allowances, and whether you want any additional withheld. Okay? Let me get that pulled up so you can see it. So this is what it looks like. A lot of you've seen this. You know, it's got your contact information. This is just a guide. So, you know, people will fill it out and try to get their number. And just pick a number, you know. Rule of thumb is the lower you withhold here, so closer to a 0, the more that's going to be withheld to the IRS. The higher you go, the less you're going to pay in. So if you're a single guy and you're putting a 5 or an 8, you risk owing at the end of that tax season. Okay? If you're a single person and you're going to make probably above $20,000, I would put this at a 0 and single. Okay? It's where you need to be. Because that way you're covered. Now, if you come in and you've done, and you know what your withholding is, you know, if you ask them, hey, you know, you're getting back $1,500, you know what you're putting on your W-4. Are you struggling during the month? Because that'd be an extra $150 a month. You know, $125, $150 a month. So if you want to get closer to 0 and you don't care about a refund, you know, you might could raise that number up, go to a 1 or a 2. Okay? We had to do that a couple of times with my husband. He used to be in sales, and he would get bonuses, and they would tax the crud out of it. And then, you know, we also had a really good withholding from when he was single pretty much. And so we were starving because they were giving it all back to us in February, but from like April to December we were starving, you know. It's like, where's your check? And so finally we had it way up, like 10, 12, I mean, way up there, you know, because he just was taxed so heavily on part of his income. So it's all different depending on the job, but you'll notice it. You'll see it when they can, and then you'll get to where you've done enough returns, you'll be like, oh no. You get that bad feeling when they hand you the W-2, like, oh my gosh, what am I going to put in? You know, what's this going to be? Because you can tell that no dependents. Maybe they made $15,000, $18,000 and they withheld like $100. And you're like, did you know you only withheld $100? Why did you do that? You know, and so then that's when you start asking the questions. Because they may honestly not have a clue. Well, I filled out that thing and I put a 10 just because I like the number 10. You know, I mean, I've seen it all. But I've also seen where some people are like, no, I put this. And then, you know, that's the case where we'd say, go talk to your employer. You need to do that ASAP to get that corrected. Because you can have the option of pulling out more. And so if they got that corrected, say, in February, March, or April, they have those other 6 to 7 months to recoup it for next year. This is really important. This is called Schedule 1. You should have that in there. So this is not the 1040, right? Remember, we got the 1040 back first class. It looked like the postcard top bottom. This is Schedule 1. So this is another page that's inside of your tax return. This is only the second thing I've showed you so far that's the tax return itself. This was new last year, okay? So before this last year, this was all crammed into the first 2 pages of the tax return. Well, now it's just on this own thing called Schedule 1, okay? So we're going to go over kind of the things that are on here. 1 through 9 is reserved, so you won't have anything on there. Line 10 is taxable refunds. 11 is alimony. 12 is business income with a Schedule C. 13 is a capital gain. 14 is other. 15 and 16 reserve. You don't worry about those. 17 is rentals. 18 is farm. 19 is unemployment. 21 is other income. Okay? So the top is additional income. Okay? And see how it's kind of earmarked way over here on the right? Well, then when you come in, this is going to be adjustments. So this is like subtracted. Okay? Educator expenses. That's a certain adjustment that we'll go over later. HSA account. Certain government business reservists and officials. Moving expenses for armed forces. Deductible part of self-employment. Simple plans, health insurance. Penalties on withdrawals of savings, alimony paid. Okay, that did not used to be there a couple of years ago, so you actually now can get a tax break if you pay alimony, and then you're taxed if you received it, and that was not the case a few years ago. Child support is still paid by who pays it, pays tax on it. Who receives it does not pay taxes, but alimony is different now. It did not used to be that way. So if it's asked, alimony is now claimed as income. If you pay out alimony, you get an adjustment. IRA deduction, student loan interest deduction. So those are adjustments. So these amounts can come off of your income. Okay? So we've got additional income here, because remember they just spent the whole lesson talking about W-2 being line 1. This is non-W-2 income. So these are different things that are still income, but they're not on a W-2. Okay? We will learn about every single one of those throughout. If we don't cover them in our tax training, you will do practice problems with them in them. So that's kind of like the second way you learn about those if we do practice with them. And that's where we talk about you're not going to learn every single thing there is to know in the basic tax training, but we will try to cover as much as possible. Okay? Any questions as far as the way it looks? So what happens on the actual software is it will ask you, did they have a farm? Did they have Schedule C income? What have you? Once you get it all in, it rolls everything to this line. So if it's something that you can have a loss on, which means you have a negative, like maybe your expenses outweigh your income, it would roll the loss to that line. Okay? If you had a really good year on the positive, it's going to be positive on that line of the income. Okay? And then these will always be an adjustment, so it's subtracted. And that is called Schedule 1. So that basic 1 and 2 page card of the 1040, your 1040 page, that is Schedule 1. Okay? Self-employment is going to kind of be a new section. So we've talked about being an employee of an employer. Okay? Now we're going to talk about self-employment. Have any of you guys filed as self-employed before? I thought you had. No. Dealt with it at all? Kind of know?
I have.
From what you've done? Yeah. So y'all are all self-employment whizzes in here. Okay. Now, one big thing to remember, and I think I'll talk about in a minute, is you may have a 1099 from someone else, you may not. If you did your own little thing at your house, say you painted or you mowed grass for a few people, or, you may be small enough, you don't get a bunch of forms. You just bring us in your receipts or your little stuff written on whatever you kept up with it, and we put that in as cash receipts. We put it on a self-employed part of the return, and you're good to go. If you have the 1099s, which we'll look at in a minute, you know usually who 1099s you, the bigger businesses, bigger contract places. Of course, yes. Do you have one? You bring those in, and, we put those in. As far as the record-keeping requirement, something I didn't show the other class, I don't know if they'll come up with anything different for Liberty. And we don't do this as good as we should. I will say we've gotten better over the years. We do have something they came up with a couple of years ago that says Liberty Tax Net Profit from Business Worksheet. Obviously, there's a lot of stuff on it. I usually go over this pretty quick with the client because there's a lot of stuff on here that doesn't even apply to most people. And so we just go through it, and there's like expenses, things like that they may like. Most people, and then there's miles up at the top. Most people already kind of know when they come in, but some don't. So if I get someone that seems totally lost, we'll go over this with them. This is why we charge more for those types of returns, because we have more time invested in it. They are more highly audited because if they show a loss, or if they show a complete loss, or if they have a lot of deductions and they get in some of those realms where they get extra credits paid to them, it's a very fraudulent form that has high fraud, so it's highly audited, which means we spend more time on it after. That's why we charge, a good amount to do those. That's one of those things we'll give you a lot of training on later, as far as what we charge and kind of the value of the different forms and things like that. Self-employed is one of them. So, carry on a business as a sole proprietor. That's what that's called, sole proprietor. It's yourself, your sole. Independent contractor. The statutory employee we were talking about for federal tax on that W-2, that box 13. I don't see a lot of those, but we may start to see more of them now that there's been some changes at the IRS. I'm going to do that again.
One question. Do you get a form? You do get a form when you're an independent contractor, right?
Usually, yes.
If you do contract labor?
Yes,
Okay.
usually you would. And that's a good question. I've talked with some clients who said, hey, I had contract workers. And I'm like, well, did you give them a form? And the technical rule would be, and I don't know, we only got to slide 70, so we're coming up as far as we got the other day. It might be in this chapter, it might not. It is on your little chart about how much you have to make to file. You also have to issue a 1099 to anyone if they make over $400. Okay? So if someone works for you and you're going to, if they make over $400, you're supposed to issue that 1099. I want to say it's 400. It might be 700, but I'll double check. Because that changes every year. But I think it's 4.
Right?
Yeah.
Or 2 or 3
Yeah.
or 4.
Yeah, I want to say it's 4. And so, that's the thing. You have to be really careful. Because sometimes you'll get people, I had someone one year, he had a few $1,000s worth of employee, like contract labor, and I looked at him and I said, did you 10-9? And he had a fireworks stand. So the thing was, he paid 7 or 8 little high schoolers a few $100s a piece. And I said, okay, made sense to me. I just notated it and went on. There's nothing we can do. Really in those situations, he would have to be randomly audited. There's nobody out there combing through those. I'll remind me, and at some point maybe I'll look up kind of the chance and the percentages that things are audited. People do get really crazy. Like if they get a letter or it happens and it's some of it's just random. There's so many types of returns, and every year the IRS is going to pull so many to get audited. It's just the way it is. And so some bring it on themselves. I've told them, I'm like, well, you made changes. That's, you changed jobs, you got married, you got a divorce, you're claiming unmarried and you've been married because you got this dependent and you're split up. I'm like, okay, I'm just going to tell you that's highly audited because you've been filing with your spouse for, 5 or 6 years. This could happen. And then when it does, they're super surprised. I'm like, a lot of it's computer generated. So they don't even know who you are. They just know your return. And they know that's one of the things the computer selects. So a lot of it's computer generated. An activity qualifies as a business if your primary purpose for engaging in it is to have income. You are involved in the activity continually, and you claim the income even if no reporting document is received. Okay? Presumed to be profit if it is profit for the last 3 out of 5 years. Okay? That is very important. Now, do we determine this, or do we have anything to do with this rule? No. We may not know if they've had a profit, blah, 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 blah. We just file it how they ask. Usually this rule would come about and be looked at the IRS audits. Okay? I believe the IRS eventually will flag if they continue to show a loss. Knock on wood, I've not seen it happen with anybody I know of that we've done. But I do believe eventually they would be flagged. And then the IRS would just ask them, say, hey, show us your documents or let us know why you're not showing a profit. It's not that we're going to make you turn it into a hobby. Just communicate with us. Show us your documents and let us know why you haven't produced the profit. Activity that is determined to be carried on for profit, not carried on for profit, is considered a hobby. Yet again, the IRS usually would make that determination. I don't usually have people coming in here going, I made $500 off my hobby. It doesn't happen. It just usually doesn't. They usually want to call it a Schedule C, which is fine. Like I said, The IRS is not going to force you to qualify this until you get over this mark. And I know people that have gone 7, 8, 9 years on that. So it's about time for me to be audited, probably on my schedule. I was up 1 year for an audit. That's when I found out it was only my second or third year with Liberty, and we had a lot of forms in our return that year, and they did a 30-day hold, which that taught me real quick what that was. Basically, the IRS can hold people's returns for 30 days for no reason whatsoever. Legally, they have the authority to do that. So a lot of people don't realize that. You know, they come in and they're expecting that refund within 2 to 3 weeks because that's what the paperwork says, and that's how they know it to be every single year. Well, if you are selected for a 30-day hold for a late review, they can hold it 30 days, and then they can send you a letter and say, we're going to hold it another 30 days. As long as they communicate with you, they don't have to do anything. So we also get those where the IRS is continually looking at something. Obviously, it frustrates the customer. It frustrates us because we want them done too. We want them to quit calling us. But there's literally nothing we can do. You know, because it doesn't have to do with us if they're getting audited. It has to do with what's in the return and if they've randomly been selected for something. When they did the 30-day hold on ours, they said it was our small business. But they had it just in this little group of possibly going to audit. And luckily, they didn't. And who knows what their determining factor is. I couldn't tell you. You know, I just know that 1 year we were in a 30-day hold. I called them. They said that's what it was, and that they would either send us to be audited or they would release the refund. And I said, okay, that's awesome. So you can see how those sorts of things that these clients don't understand and don't know could be frustrating, because a lot of these people rely on their refunds for things they need to buy. I mean, they rely on it as like a little savings account. You know, I'm going to go do this. I'm going to pay this bill. I'm going to buy the kids this. I mean, they rely on it. I had someone they were like, oh, we were going to make this payment, and we were going to get our kids this and do this and pay for the whatever lesson it was. And I just thought, well, you know, sorry, it's not on us, you know, and it's especially tough if they've forgotten a form. Similarly, 1 year we had someone that happened to that the IRS sometimes now, state and federal, on some sorts of forms, will also hold their refund if they didn't submit it the first time. They don't do it with everybody, but the one form that they're really big on is the health insurance form. If you fall into the category that you're supposed to turn it in, so if you're like on the exchange and you pay a premium, it's supposed to be reconciled with your taxes. They started preemptively sending that out if they forgot it. Well, we had people that forgot they even had it for a couple of months. They held the refund. They were hot. You know, well, we don't know. If you don't, we don't know. You said you had insurance. We don't know. You had this other insurance. You know, you forgot that you had it for a couple of months. We had no way of knowing. So it does happen. It does happen. It's like I tell everybody, we don't know what we don't know, and we need to consider that they don't know anything. We literally need to consider them as tax babies. They're starting out. They don't understand. We need to explain everything with them. Okay? Let's see. Considered a business. Whether an activity is engaged in for profit is determined by reference to objective standards, taking into account for all facts. Manner in which the taxpayer carries on the business, expertise, time and effort, financial status, and element of personal pleasure. So this is just talking about, you know, this is probably what the IRS would look at if they're trying to make any kind of determination to say it's a business. They're going to look at the manner in which you're doing it, your time and your effort, your financial status. You know, are you doing it to just get that Mary Kay discount? You know, you're not selling that much. You're just kind of putting in an order every now and then to get a discount. That's why you're showing that little bit of a loss. That may eventually make you turn it to a hobby. They're not going to let you keep getting that deduction. A hobby is not considered a business because the activities are not carried on to generate a profit. Hobby income is other income, line 21. You will see line 21 probably 100 times before we're done. That is the other income line. Other things are put there, including gambling and some other ones that I can't think of right now, but I know hobbies, gambling, and there's a few others. That's a big one for other income. Okay? 1099 box 3, I think, might also go there, other income line. Very, very important line. You will see it, probably guarantee it on your exam. Okay, this is just a summary list. They haven't showed us the 1099 yet. You've probably all seen one. There is one in your packet. This is as far as we got the other day at the other training. I will probably, if we're not quite there yet, look at, what's the time check for me? 15 minutes. We'll keep going. We'll see if we get through. We may not. W-2 and 1099, okay? W-2 used by employers, reports to agents, tips. 1099 over here used by individuals or businesses to report payments to non-employees, report non-employee compensation, report rents, royalties, or other income. Okay, if income is reported in box 7, okay, you're being reported as self-employed. Okay, I'm going to have you go ahead and turn to that 1099. It's kind of funky looking in there. It's got a little arrow on it, so it's kind of, okay. So look at the 1099. So lines 1, 2, kind of those top lines. There's like an other income line. There's rents. There's royalties. We will see these every now and then. Pay close attention to where the income is listed. Okay? The only thing that will generate those tax credits for children, those big EIC refund credits, is box 7. So if someone had somebody else mess up on their 1099 and their income is not in box 7, okay, they're saying that's not their main job. Okay? So box 7 is your main job. If that employer prints this or that contractor prints that and does not put it in box 7, we might want to question it. Okay? The reason I say that is I have seen definitely handfuls of times these be filled out wrong. Why would that be? Well, these can be handwritten. I mean, these can be filled out by somebody that really doesn't know how to fill them out. I mean, all you really got to do is fill it out, mail a copy to the IRS, and give it to the person you're hiring. So this could be done by a smaller business, maybe somebody that just had a few employees. They may not have gotten help on how to fill this out. So they often will have errors in them. The one that I remember was one of my first couple of returns I ever did.